You're welcome to the Policy Council. My name is Okwemi Agbaje. Today we look at Nigerian and global capital markets in 2014 and the outlook for 2015. I have a significant player in the market to review these issues and to take a view about what the future holds. Enjoy the program. You're welcome back. It's the Policy Council. My guest today is a leading player in the Nigerian capital market. He's the Managing Director of Vetiva Funds Managers Limited, Mr. Damilola Ajayi. You're welcome to the Policy Council.
Thank you very much.
So tell us about Vetiva Funds Managers. What do you do? What's your role in the capital markets?
Vetiva Fund Managers Limited is a fund manager and asset manager. We are registered with the SEC as fund and portfolio managers, and we belong to the Vetiva Group. Vetiva is an investment banking institution that cuts across the spectrum of investment banking, both the buy and the sell side. So, we have the pure play corporate finance, we have trusteeship, securities dealing, and asset management. So our focus essentially is to provide asset management products and wealth management products to our clientele.
Okay, we'll talk about that later, but let's look at the Nigerian capital market. In 2014, the story I hear everywhere is that it's not been a fantastic year. Give me your own assessment of how the market has done this year.
Well, it's understandable if you get that kind of feedback from investors. And in looking at our market, we need to take the backdrop of what has happened in the past. In 2012, the market returned 36%, 2013, 47%. And even the first few weeks of 2014, we had a rally and we thought that it was going to continue. But some things change. Our market is increasingly sensitive to the macro environment and what is happening globally. So on the global scene, we had the announcement of tapering from the US Fed. And that was, what that did was to trigger concerns regarding liquidity into the emerging markets. And the positive sentiments that we had for emerging markets began to reverse. But that's on the global side. Yeah. On the domestic side, I remember correctly that it was in the beginning of the year that we started talking about the transition at the CBN. The market was worried or had concerns about the hawkish stance at the CBN and how long this was going to play out because of its effect on the markets and effect on the economy as a whole in general. And also, even though it was mild, the market was also beginning to talk about the 2015 elections. So you had a scenario in which the positive sentiments in which we entered the year started to wane. And I remember by the middle of the year, we were only up 2%. And you also need to remember that the banking sector was hit back-to-back with CRR increases, and this showed in corporate earnings. Yeah. Right now, we're at negative 6.8%. And this is mainly year to date. And the downturn has been exaggerated in the last few trading sessions. And it's been driven mainly by oil. But we need to also remember that the oil price have been dropping maybe in the last 2-3 months or thereabouts, based on anticipation of slowing growth in China, appreciation of the dollar, etc. But what we're seeing here is, what you may term the OPEC, non-OPEC dichotomy and supply dynamics, that are going on in the market. So it's been pretty interesting. But what that tells me as an investment manager is that gone are the days where the market goes in one direction, macro events are in another direction. Yeah. So now markets are being driven by fundamentals.
Yes. Is that good or bad?
It's good in the sense that as markets are driven by fundamentals, the markets begin to more and more reflect the sentiment of the investors concerning the general economy. So you can use it as a barometer, to reflect what investors are thinking about the economy.
Days when you remove a central bank governor and the capital market will show no implication.
Yeah, we don't have.
Or when oil prices, which is 85% of our earnings, can fall and the capital market will not shift. Today, anything that happens,
the market is getting more and more being an accurate barometer of, what is happening on the wider scale.
Given what is happening right now, what do you expect investors to do? As in, so capital market returns are unclear or uncertain or even declining. What do investors do? Do they turn to fixed income instruments? Do they exit the market? What do you expect them to do?
Well, let me start by saying that the fixed income market itself has been bearish this week. Yields have gone north, especially driven by monetary policy environments that we found ourselves in. And what this tells me, because usually you have different asset classes are not correlated with each other. But when you have both the equities and fixed income market being bearish, then what that tells me that Nigeria as a whole is not being seen as attractive, or the investors are expressing macro sentiments and not sentiments that have to do with one asset class. But I'd like to take us back to 2008 when it comes to how investors should behave. One of the challenges that we had then was speculative behavior. And I'm glad to see in my interaction with investors now that we're seeing an increased level of sophistication. Investors should always look at the market from a long-term point of view. The prices that we've seen, the movement that we've seen in oil, I believe are exaggerated. Clearly, oil will find a new level, and the market needs to accept that level. And when the market accepts that level, markets will tend to moderate. So the question I want to ask myself is that, is this really a buying opportunity, or is this really a panic scenario? If you look at some of the counters that are trading on the exchange, we're seeing dividend yields of 10%, dividend yields of 12%. Have the fundamentals of those companies really changed? So I always encourage investors to take a long-term view. Now, from a tactical point of view, you need to switch. If you believe, for example, that we're still going to have some sell-off in the equities market, you can switch a portion of your portfolio into fixed income instruments, because, like I said, yields are also going north, which makes them more attractive. But essentially, the market investors should have a long-term view on the macro environment and the fundamentals
of the country,
of our economy,
and of individual stocks.
Exactly. Exactly.
Okay, let's take a short time out. Fascinating conversation with Damilola Ajayi, Managing Director of Vertiva Funds Managers Limited. Looking at the capital market in 2014 and the prospects for next year. We'll be right back. You're welcome back. Still the Policy Council, and we're looking at Nigerian capital market performance and global market performance. So, Damilola, in the context of Nigeria, we've seen the Nigerian picture. How has global markets, equity markets in other jurisdictions, how have they done in 2014?
Well, global equities have been mixed. If you look at the MSCI World Index, for example, is relatively flat. Same thing with MSCI Emerging Market, relatively flat. And that is reflecting the view of global investors on what we believe will pan out on the global macro level at the end of the day. Now, there are some economies that are very important to the global market. Let's start with the United States. We've seen good numbers coming out from the United States in terms of unemployment, and other labor statistics that you have, and other macro statistics. And the markets have generally done well until the last few trading sessions as well. Yeah. If you look at China, the expectation is that the Chinese economy will slow down. But, I always talk about the level of reaction of the market. The Chinese economy is not contracting. It's just the rate of growth that is slowing. And, analysts will tell you that, we expect the Chinese economy to still grow at, maybe 7.4, 7.3, and this is a country that did 7.7, last year. So bringing the conversation back to the way markets exaggerate. Let's look at Europe. Europe, there's a tendency to come to the conclusion that they still haven't gotten their acts together, and we're already seeing that in what is happening,
across the range of indices.
Exactly.
Employment,
exactly
deficits,
within the economy. And I hope that the EU will get its
I don't think so, because I think they've even complicated the position further with sanctions on Russia, which have had the effect of dampening growth further in Germany and France and Italy and other major economies. So I wouldn't be shocked if Europe slips back into recession.
Analysts have expressed those concerns, and it's always difficult for policymakers to balance politics with economics. We want to sanction Russia. However, quite a chunk of our energy is coming from Russia. How do we balance that? So that's the balancing act that the leaders, need to look at. But more and more, the population is driving the leaders to look at policies that will affect the everyday man on the streets. You know, let's leave politics by the side. What will happen to, you know, my ability to invest, my ability to save, what will happen to jobs, what will happen to, you know, consumer spending, you know, demand in the markets, etc. And we're seeing that shift. Let's just hope that the leaders will not realize this and take actions too late.
To what extent, particularly in terms of the ratio of investors, does the global space impact the Nigerian space? How have we seen? I know that there was a point at which 70% of investments were foreign investors, but it declined maybe to like 44, 45. What's the status now?
Well, I remember a point in time when we go to market the Nigerian story, what we used to say was that Nigeria is disconnected from the global markets, and that was the selling point. But things are changing. Nigeria is getting increasingly integrated into the global space. Now, there are arguments concerning exactly the percentage of foreign participation in the market. Okay. I think most recent statistics will have it at 55-45, meaning 55 going to global investors or foreign investors and 45% being local. And let's not confuse that with inventory holdings. This is participation in the market, trading activity in the market. So whether it's 70%, whether it's 55, whether it's 40, the participation of foreign investors in the market is huge. So when we see global shifts or global movements, that is likely to transmit into the Nigerian economy. A good example is beginning of the year, when we had the tapering. You know, this was something that was announced, you know, in the US. Quite a chunk of our participation was, you know, by foreigners. So as liquidity became a concern, it affected not only developed economies, but also the emerging economics, frontier economies, and we saw a sell-off in Nigeria. You know, so we cannot at this point in time.
And you mentioned earlier the impact of oil prices and perceptions.
Exactly. So what happens globally, you know, affects us in Nigeria. We're in an increasingly interconnected world, and you know, we just need to realize that that's the fact on ground.
Okay, let's take another time out. I hope you're enjoying the conversation and learning more about what drives both Nigerian and global capital markets. We'll be right back.
My name is Laide Awoyemi. I dey live for Lagos. You see as our new Lagos just define the go. Good thing good though. To go market now, no hard at all. Just pay. Sit down inside BRT bus. Small time, you don't reach where they go. Hospital nko, e full ground. And for me and my pikin where I just born, treatment now free. You look left, you look right. Them they build new roads, new hospitals, new schools, new things everywhere. Everywhere they shine, gone. We thank God though. But come on, I hear saying that this tax money wey they pay, and then they use do all these good things. Me, I they pay my own tax too. Say they pay your own.
Pay your tax. It's your civic responsibility. It's your duty. It's the law.
You're welcome back, and we're reviewing the Nigerian capital markets. Damilola, in this whole picture, were there positives around the Nigerian market in 2014? So, for instance, I noticed that some few offers were beginning to happen again. Some people, some new products, all of that. What did you see in terms of positives in 2014?
Well, we had quite a number of positives in the market, and I'll start from the macro level again, because I mean we've established that the macro environment is important. Q2 GDP figures, Nigeria grew 6.54. This is the most impressive second quarter we've had since the rebasing. That is very positive, and inflation has been kept under at single digits, which is a policy target. So exchange rate has been relatively stable. So those are positives. When we go into the capital market in itself, we've had quite a bit of primary market activity and new listings in the market. Seplat listed in the market. CWG, Computer Warehouse Group, listed. We had the listing of Carverton listed. We had the listing of the first ETF.
Exchange
Yes, the first equity ETF. But
That
this
was
is actually
yours,
the
isn't
yes,
it?
that was
We'll talk
that was
about
that
that.
was done by Vertiva. And we're going to have in the pipeline more ETFs being listed, in the market. So the market hasn't been a tale of woes as well. And we've seen some capital raising: Diamond Bank, Access Bank, Transcorp. And especially for the banks, I think we're going to continue to see
That
more
will
of that. As they try and tidy up capital adequacy, issues, and as they try and align to Basel II, we're not even started talking of Basel III. So it's been positive. Also, when you look at the market, like I always say, the movements have been exaggerated, and there's no need to panic.
You mentioned the ETF. What is an ETF?
Okay, an ETF is ETF
Exchange-traded
fund.
Okay.
And I'll give a practical definition, which may not necessarily be 100% technically accurate. An exchange-traded fund should be seen as a mutual fund or a unit trust that trades on an exchange.
Okay.
I think we're all familiar with what unit trust or mutual funds are.
A group of investors
Exactly,
coming together under a collective scheme.
investment schemes. But instead of the investors interacting directly with the fund manager, either to buy, which is what we call a creation, or to sell, which is what we call a redemption, you can do it on the secondary markets. The way you trade any other stock, whether banking, industrials, consumer, you call your broker and you place a trade, on the floor. Now, the second unique feature about ETFs is that they usually, technically not necessarily, but usually track indices, assets, or portfolios. Yeah. If you look at the New Gold ETF, which was actually the first ETF that we worked on, it tracks the price of gold. Vertiva Griffin 30 ETF tracks the price of the top 30 most capitalized stocks, on the exchange. So it gives investors an opportunity to access the market via simple products. Remember, and I always go back to 2008, one of the problems we had was speculative trading. Most investors, especially the retail investors, had neither the time nor the skill to choose stocks. But products like this, give you an opportunity to access broad market performance, without having to, speculate or think, should I buy X or should I buy Y? And exchange-traded funds are also traditionally cheaper than traditional, mutual funds that you have there in the market. So the value proposition is quite attractive.
What has been Vertiva's experience with your own ETF?
It's been a long journey, but I would say it's been an interesting journey. We started talking about ETFs many years ago, and within Vertiva, I would say we're very proud to have pioneered, that industry. And that fulfillment is further heightened by the fact that we're seeing other players coming into the market to also launch ETFs.
You also did the balanced fund.
Yes, the DB Balanced Fund is a traditional collective investment scheme product, not an ETF. Yeah. And what the DB Balanced Fund does is that it invests in a mix of assets, both equities and fixed income, to take care of the volatility that is associated with equities. So any investor looking for long-term growth, can invest in a DB Balanced Fund and know that your downside is hedged because there's an appropriate allocation to, fixed income instrument. But the asset management industry generally, it's growing, still at its infancy. But I mean, for us, it's exciting times.
Okay, fantastic. Yeah. Let's take our final time out. I'm learning a lot and I'm enjoying myself with Damilola Ajayi, Vertiva Funds Managers. We'll be right back.
My name is Onyema Kinzago. I live in Lagos where things are getting better every day.
Our school has just been renovated.
And they give us free notebooks too. Going to school is easier and safer for students like me because I can cross the highway using the footbridge. And I use the BRT bus, which is fast, convenient and free for students like me. I enjoy looking at the beautiful streets on my way to school. And the many street signs tell me where exactly I am. When I get to Basic 12, the government will pay the fees for my GCE and NECO examinations. I am happy. My mom and dad says all these good things are happening because they pay their taxes. I hope to pay my taxes when I grow up and start working. Have you paid your tax?
Pay your tax. It's your civic responsibility. It's your duty. It's the law.
You're welcome back. It's my final segment with Damilola Ajayi, MD of Vertiva Funds Managers Limited, and we're looking at 2015 outlook. We know that's politics, we know that's global uncertainty. But what do you see at the global level and the Nigerian space?
Okay, we still have a few months to 2014,
Okay, last quarter.
and I don't think anything significant will change by the end of this year. Inflation will still close single digit, around the 8.5 levels. Traditionally, inflation tapers towards the end of the year anyway. There's a monetary policy committee meeting in November. It is uncertain what the stance will be, but clearly to be hawkish. The specifics, we'll wait and find out. Exchange rates will remain relatively stable. Oil will find a new level. What that level is, one can have an intelligent guess now. I think we need to watch the market.
You don't think exchange rates will be in play given oil markets uncertainty? And I was with a CEO yesterday who felt he saw a 200 naira to the dollar. Was he being too
Not necessarily.
fearful?
Exchange rates are, a lagging indicator. So we will not see the effect now. So now let's go into 2015. I'm always optimistic. So the first thing is we expect 2015 to be positive. Two reasons. We expect corporate earnings to be moderately better than we had in 2014.
Okay.
Business environment, generally speaking, has been good. Then also you talk about the post-election euphoria or the post-election rally. If you
So
look
in a
at-
way, it's
yeah.
good for 2015 that the election is fairly
It's
early.
early, exactly in the first quarter, exactly. So we see that as positives. However, there are risks. So I go back to oil. Depending on where oil settles, it has implications on government financing options. So for example, how does government fund its operations? Will you borrow more? That is unlikely because of the debt service to revenue ratio. Are you going to remove subsidy? Are you going to reduce expenditure? That has effect on growth in the economy. Are you going to implement the treasury single accounts, which banks have also told us will have a negative impact on the economy? So on the revenue side, there are challenges that we need to take care of, and I'm sure the policymakers are looking at this, and the right decision will be made. Each has its own implication, either social or economic, but we'll see how that plays out. Exchange rates, I still believe that we will not see an official devaluation policy or pronouncement from the central bank. We are likely to see more of depreciation, and we need to, divide these two. So the traded band officially may shift a little, but the pronounced effects will come when it comes to rate divergence at the interbank markets or the parallel markets. So we're likely to see that divergence. So maybe what the prognosis that you had is talking about will be for maybe the parallel or the interbank. We will see that divergence. I would not like to put a figure to it,
Yeah, of course.
but definitely that divergence will come. And that in itself, if you further drill down, has its own implications. Inflation, for example. Our markets are an import-dependent economy. So if you have issues with exchange rates, then you have issues with imported inflation. Also, what's going to happen in the north? The food basket is approximately 50% of the CPI. So will the north be stable? Will there be disruptions, etc.? We want to be optimistic and believe that there will be stability in that region, which will further, be a positive for inflation. But one thing is clear in my mind, the ability to maintain single-digit inflation in 2015 is threatened somewhat. Monetary policy stance. This has been a debate in the markets since the beginning of the year. Analysts had initially signaled that we may see an unwinding of the hawkish stance. I think the stance will be hawkish for longer, based on the revenue risks, etc. So that's that on that line. So whilst we believe that 2015 will be positive, we need to watch, those risks. And globally, we've already talked about oil. China, growth may begin to moderate in China, and that has an impact on,
the whole
oil or commodities generally, and general markets. Europe, is still a country to watch. I believe we'll continue to get good news, out of the US. And politics will also be interesting in 2015. You have the emergence of, ISIS. You have the Ukrainian crisis, and what's happening with Russia and Europe. You have terror alerts being raised in Australia, in the UK. So we need to watch all that. And remember, we said the markets are increasingly becoming a barometer of what's happening on the macro level. So anyone who wants to project just needs to watch the macro environment very closely. Yes, and it's very dynamic, it's evolving, so we'll see how it goes. We remain optimistic.
Overall, The implication on Nigerian equities, what do you see?
Nigeria
for
equities
2015?
are likely to close positive. And, a few reasons. Number one is low base effect.
Okay.
I believe that even though the market will moderate, we are likely to close this year negative. So you're already starting from
next year.
you're already starting from a low base, and I want to be optimistic that the policymakers are looking at the positives for Nigeria next year. A smooth, non-disruptive transition will be the best for the markets. In the markets, we're not politicians. All we want to know, are there going to be disruptions? If there are no disruptions, the markets will be happy. The euphoria will,
drive,
yeah. And Nigeria has ticked quite a number of boxes in terms of the business environment, which is why we remain positive that the corporate earnings will be moderately better than what they were in 2014. So policymakers should drive into those positives and quickly tackle the anticipated negatives, revenue, oil prices, interest rates, etc. But on a general scale, we are positive into 2015.
Great stuff. Thank you very much for coming on
Thank
the
you, sir.
Policy Council. We'll be right back. That was a fascinating take on the drivers of capital market activity in 2014 and the outlook for 2015. I think the summary of my guest's position is clear. So the future may not be as bleak as current circumstances suggest. There are positives, there are positive fundamentals around the Nigerian capital market and around many of the individual stocks on the market, but there are significant risks, and we've highlighted those significant risks. The oil prices present challenges for revenue managers. There are security issues, there are political transition issues that may affect market if not carefully managed. But beyond that, the fundamentals present an opportunity which policymakers can leverage. A word is enough for the wise. Thank you very much for watching. See you next time.